Welcome to the Family Office Sherpa podcast. I'm your host, Shaun Parkin, founder and managing director of Hall Road Investments. The aim of this podcast is to provide practical and implementable advice for those looking to build, manage, or service a family office. This is not, however, investment advice, so please check the disclaimer in the show notes. In this episode, we are asking the question, who is the investment manager for your office?
This is the Family Office Sherpa.
Now, often there is confusion between the investment committee, which is a governance structure, and which is what I sit on a lot of the time, and the investment decision makers, the portfolio management team. And this confusion continues. And it's kind of the nature of family office, right? Which is you don't want to be too bureaucratic. So, you do get hybrid versions of things. But I thought it was a good idea to make sure we understand how or who has responsibility for the investment management, and are they given the right guidance, or are we providing the right guidance on how these decisions, these portfolio management decisions should be made. So because if you've got confusion, you get misalignment, you get inefficiencies and poor decision-making outcomes, which we talked about in the previous episode. So what I feel is that it's really important to clarify the roles. And again, this is up to you, but people need clarification. What is my role here? What's my responsibility here? And where does the authority sit across both those with external parties that manage the investments and those that have internal? So I thought I'd highlight some key aspects that need to be determined and what I've seen work well. This is all best practice of offices that I've seen when setting up this process. So what I'm going to do is I'm going to separate it between those offices with internal team, so what you call the portfolio management team, or the team may be one person, it may be family members, it's up to you, but an internal team that's making those decisions, and those that outsource the bulk of those investment decisions, right? So let's start with internal. What's something that you need to know first, which is, are you giving the internal investment team the ability to make decisions, or are they there for more reactive points of view, right? So you need to clarify if the team has discretionary power, or are they just there to advise? You need to determine whether the team's role is a more of a strategic role. So at the higher level asset allocation, what those strategic asset allocation looks like, or are they also giving the role of, which is operational, which is, the term that a lot of people use when they're starting to think about manager selection. So they're doing the DD, and they're making those manager selection decisions. You've got to establish if their input is what you probably call binding, or is it a guide? Is it a measure of two? But is it optional? So we're just trying to get to the point where, what's the purpose here? Are they here for, this is my investment decision and it's binding and we're going to go out and we're going to implement it? Or is it a guiding component for others up the chain, maybe the family, maybe the executive, to make those decisions? You've got to communicate who has the final call. You really do. Because I've seen people go, well, is this my call? Is this not my call? And then 6 months down the track, it's like, who decided to do this? Even though there's processes in place, you just got to communicate who has that final call. Is it the team, or is it a governance body higher up, which might be called the executive, or it might just be the family, right? So you have these very flat structures, but you just got to communicate it, and you got to write it down, and you got to have everyone clear. The next thing to sort of consider, are they given due process on how to make these decisions? And this really harks back to the previous episode, but what it does is you've got to provide a documented investment policy. I've talked about this a lot, but having an investment policy or some version of an investment policy statement which gives them a very clear articulation of the process. You've got to set expectations for how decisions are brought forward, e.g., pitch decks, internal file notes I've seen work well. I've also seen just emails work well. If the team is incredibly flat in structure, don't over formalize it, but really make sure that, how these ideation or these decisions, or here's a new manager that I just met, that kind of thing. Just be really clear on the expectations that are here. I think the reason why is because, well, what I've seen this fall over is because we have a decision that's been made. We want to go back to some version of how did we get to this point? And so having some documentation without, again, being too bureaucratic. We're not big institutional asset managers here. We're family office. So just really being like, okay, we know where that documentation is. We know the reasons why we're in the investment. We know what the DD checklist, what the due diligence checklist was. And also this goes back to the technology piece as well. We're starting to see people start to use document storage or a version of that, which allows people to, manage the process. So if we're going for a new manager or whatever, then having the documentation alongside it so we can go back. And that's really where technology and document storage and document management is coming into the fore. So people are starting to look at. And include, things like frameworks for decision, go, no-go, risk return analysis, again, depending on sort of the deep dive that you want to do, but just be very clear of the process. The next one being, are they aware of veto powers of stakeholders, things like family boards, principals, etc. You can't go into family office and think that it's going to be a normal corporate process. People build family offices or establish family offices for the managing the assets of a single family. Now, that family, a lot of the time, has an ability to say, nah, we're not doing that. And all the due process in the world isn't going to stop that because it's their money, it's their process, it's their ability to do it. So, but you have to be clear around what that veto power looks like, because it can get very frustrating. You can lose really, really good staff by having this, all that work you did, I totally understand what you're trying to get at, but no. And without good reason and things like that. So just, you got to clarify who has veto power. You should also clarify the reasons a veto power might be exercised. Things like, values misalignment is a good one. They don't believe that, the person with the veto power believes that the risk appetite hasn't been established. There might be reputational concerns or something like that. Something where they go, no, I'm going to say no to this for these reasons. Just to clarify and be really transparent around the process and the timelines. And really, like I said, manage the expectations of people that come into this. If you have an office where the internal team has, like I said at the beginning, this not absolute power, but ability to manage the portfolio how they see fit without having to go through another layer of due diligence and decision making, then you got to manage the expectations around that and say, this is what you have. If you don't have it, if you say to them, no, all these sort of things we need you to do, but then ultimately we're going to be the ones that say yes or no at the principal level, then you need to communicate that. The other thing being, and this is incredibly important, is are they aware of their parameters? What are their restrictions? What's the investable universe? It can be very frustrating finding really good investments and then finding out later that we're not allowed to have it in there. Hedge funds as an example, or derivatives, or, things like that. It's like, well, that would have been good to know that it wasn't available. I mean, it tends to be in the investment policy, and I think that goes back to that, which is making sure that that's articulated there. I think that's a really good place for it. Same with things like concentration limits, environmental, social, and governance, and impact components, thematics, indexing versus active, all these kinds of things. This should all be in the investment policy, but they need to be aware of it from an internal perspective. Also, really importantly, is, compliance, tax, jurisdictional constraints. So that's something that the finance and the CFO and things like that have that overlay of. We tend to not let the tail wag the dog too much, but it's still very much a big factor. So, but if you're the internal investment person, you keep coming up against these roadblocks of, well, this doesn't make sense tax wise and all the rest of it. That's just a reality of life, and you're going to have to deal with that. But you should be. It should be articulated to you. It should be communicated very clearly to you. So that's the internal one. External. So when I say external, I mean things like wealth managers, advisors, consultants, things like that. Number one, and this is such an important one, do they understand the mandate? Do they understand what the job is here? So clearly state the scope of their involvement. Is it advice? Is it implementation? Is it oversight? Things like specifying whether they are the gatekeepers for opportunities coming in. We do have hybrid versions of that a lot of the time, which is to say, right, this is the core, and then we will still have these opportunities that come to us, and we would love to have you help out with one deal by deal kind of due diligence, but also being the gatekeepers for this kind of stuff. So idea generation, execution is a really important one. Having that centralized within one partner is super helpful from an efficiency perspective, from knowing when if you're an office that has a lot of single stock trades and things like that, centralizing that, but also that helps with reporting as well. Another thing is to sort of confirm things like their limits in terms of authority and influence. That's a training element. I mean, I've been on both sides here. I've been an advisor, an investment advisor, and I've been on the distribution side for asset management, but also obviously now for the last 6 years, I help single family offices with investment governance, but I'm not a gatekeeper from that perspective. But you've got to recognize where your lane is that you're swimming in. But also, you, as a good advisor or wealth manager or whatever you want to call yourself, you need to understand what the preferences and biases and what the client's actually looking for. And I think that's both a responsibility of the advisor to listen, but it's also a responsibility of the family office to articulate that. There's no point getting frustrated with noise and people coming to you with ideas if you don't tell them this is what we're looking for here, right? People can't read your mind. And if you think about where they're getting their revenue from, it's by ideation sometimes. It's by trades and things like that. So don't be frustrated when they keep showing you trades if you haven't told them that's not what you want. So just ensuring that alignment with objectives of both the family, the board, things like that. So do they understand the mandate? Such an important thing. Next one, have they been given the investment policy and the purpose document? When we do RFPs, it's really important that we hand over the investment policy to them and say, this is what we are. Do you understand what we're trying to achieve here? So ensure that external parties receive the IPS and that they understand it. I tend to get them to give me feedback on it because I love writing an IPS and I love talking to people internally about it. But sometimes it's really good to get someone's external feedback. Provide context in that document and the purpose document for values, for priorities, for investment philosophy. Just making sure that the external party knows what your philosophy and what you're trying to achieve here. Again, walk them through things like historical decisions or sensitivities that may shape the strategy. We've all got bodies buried somewhere in terms of the investment. So a lot of the time I come into a new family office and there's certain parts of the portfolio that not necessarily is sensitive, but it's more, well, the purpose of this portfolio was this for this period of time, and now it no longer is. So we need to be able to understand those historical decisions, how we got to them, and how we're moving forward. But again, that needs to be articulated by the office and needs to be listened to by the advisor. And the last one on this sort of IPS document piece is updates to governance and challenges or changes to the strategy. So just having not version, but this is what we were, this is what we are, this is what we want to be is often a good sort of process. But giving them updates on how we got to where we're at and where we're looking to get to is super helpful as well. Another one which tends to get forgotten is what is the meeting cadence supposed to be or need to be? How often you're meeting people. Now, some people like a monthly meeting, and I'm fine with that because that is almost a really good touch point, to sort of go, it's been 4 weeks or a month, just to check in almost, right? You can have check-ins and then you can have a big quarterly. I find quarterly for sort of those family offices that are more outsourced oriented is quite good, but it's still a long time. 3 months is a long time, especially when markets are volatile and things like that, or when decisions need to be made or they need to, we need greater clarity on how we're going and things like that, or there might be a few moving parts. So just be really clear around what level of touch you want from the advisor. Just align the cadence, those meeting cadence, with the needs of the portfolio. We've got a high turnover, highly, lots of moving parts portfolio. Then make it a month. Make it every month, because there's going to be different things that are happening every month. If you've got a really long-term, heavy private markets that's not actually getting priced or something like that, then, if a lot of the implementation is done via beta or market-style investments like indexing exchange-traded funds, that might not need greater clarification, because it's not like we don't know what the market has done. We'll have an understanding of that. But if you've got highly concentrated active managers and things of that sort, then monthly, see what's happening, especially if we have big corrections or upsides in the market. We want to make sure that as an investment committee, we're monitoring that a little bit closer. So, just really set expectations for responsiveness outside of that formal meeting. I come from an institutional background, so my immediate, mindset is someone emails me or calls me, I call them straight back or email them straight back, even if it's just to say, I'm on this, I understand, or I will get this to you. Nothing more frustrating to me, and I'm not sure if it's me or this is everybody, but just not getting emailed back by service providers is really, really frustrating. Just say, I've got it, I understand it, give me some expectations of turnaround, just stuff like that. Really simple, got it. I don't know why it's so hard, but sometimes it is. Also, with those meetings, you really need to give them guidance on what you're looking for from it. As an office, what you want them to bring to that meeting. If you want reporting packs, if you want particular research done, something like that, then make sure they're aware of it. Don't be surprised don't get upset when they come with something and you haven't told them what you want, right? So one of the reasons that I'm helpful in investment committees is that by the time we've had a few of them, they know what I want from the meeting. If we've got a discretionary portfolio, I want the trades, I want to understand why they were done. These sorts of things. I'm not a passive participant in investment committee meetings, especially when there's an advisor there, because I want to understand what they're doing. I want not interrogate, that sounds like a little bit too much, but to understand what they're doing, how they're managing the assets, if they've done trades, why have they done trades, to line up things like, we've gone from this asset to this asset, why have we done this? I'm not a backseat person. I'm going to be there asking questions, because my role as the critical friend is to make sure that everyone understands what is happening. They start putting a lot of jargon in, start talking about secondaries and all this sort of stuff, and people go, what's that? I'm the one asking that question, and I don't mind putting my head above the parapet there. Okay, and lastly, what part of the portfolio do they have? Are they the slice of the portfolio or the whole of the portfolio? They need to understand where they sit in that. That's why, to a certain degree, I would default to having less counterparties than more. There is an argument for diversification and stuff like that, but you end up getting over diversification, or you get a significant amount of redundancies, right? Which is not what you want here. You want good counterparties, but also good counterparties that have the ability to look at the entire portfolio and look at it from a risk point of view, from bringing ideas and things like that. And if they only see a slice of it or a quarter of it or whatever it ends up being, they're like, well, we don't know what else is happening, so we're finding it really difficult to bring new ideas to you. So it provides them context, it provides them specificity on their role, and all these sorts of things, right? So it's really, really important for them, the advisor, to understand what they've got in terms of their mandate, but also, being able to look at the greater portfolio. I'm really happy to give people more information that might be sensitive, but I think this is where we fall over a little bit in family offices. It's like, we're not going to show them this part of the portfolio. So why? It's like, well, because that's this part. And I was like, well, they would have a better understanding. We'd get better IP transfer if they knew what else we had in the portfolio. So just think about that. Anyway, that's the last bit. I hope that was of interest. If it was, make sure to rate and click the little star button. That'd be awesome. If you're looking for more family office insights, be sure to join the thousands of other subscribers that are on the Sherpa newsletter. You can find that at wholesale.com.au. It's in its 6th year. It's been going for a while. It's feedback is always very positive. You can find me on LinkedIn, or feel free to email me at Shaun, so SHAUN, at hallroad, that's HALLROAD.com.au. Until next time, thanks for listening.